Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope everybody had a very beautiful weekend and a very great day of trading. And in today's markets, guys, well, it was a little bit of a mixed day. SPY still able to etch out some gains, however, up 0.12%. QQQ really running away with the show. Most of that was from semiconductors. The red point on the day was financials. Financials led heavily down by JPMorgan stock, coming down over 4%. And that was due to a few comments made by the CEO, Jamie Dimon, on his annual investors presentation day over the course of this morning. So in today's video, guys, we're going to take a look at a few things together. We're going to take a look at what exactly Jamie Dimon said that sent JPMorgan stock down about 4%. And then we're going to take a look at one company earnings that we have prepared for you guys today. And that is going to be Palo Alto Networks. They had a disastrous quarter last quarter, and we need to see whether or not the turnaround story is in full swing. So we'll be taking a look at their earnings as well. And then lastly, guys, of course, we're going to take a look at our major technical analysis rundown in terms of our major indexes and big tech names, and conclude with a quick glimpse into my portfolio for the trades that I have locked in for the upcoming week. So without further ado, guys, let's get right into today's video. So SPY up about 0.12%, QQQ up 0.7%, but as a whole, guys, very, very mixed market, right? When you pull up the heat map, you can see that big tech and semiconductors were really the ones responsible for most of your gains today. That is where it stops. Healthcare had a relatively red day. Financials, very red day, led by JPMorgan, closing about 4.5% to the downside, and the bottom half of the market, guys, just not cooperating that much. You did have a little bit of gains here in your industrial sector, but for the most part, a lot more stocks were red than green on the day. Your green was really coming from the larger components in the S&P 500, so not a very broad market, but still a green day for the SPY and a green day for QQQ. Take a look at your one-day relative performance. You can see that even better. Very, very mixed market here today, guys, right? Pretty much half and half, right? Technology, basic materials, communication services, and industrials to the upside, and everything else to the downside, led notably by financials. But financials does have a lot of space to work with here, so a little bit of a daily drawdown is not that big of a deal in my opinion just yet. So moving upon that, or rather building upon that, let's take a quick look at what exactly happened to JPMorgan here today, guys. Take a look at this massive, massive red candle, right down about 4.5% today. And it was due to a few of the comments by Jamie Dimon, the CEO. Number one, he talked about buybacks in the wrong way, and we're going to take a look at that. And number two, he also hinted that his retirement may be a little bit closer than anticipated. Supposedly, it was to be about 5 years away, and the way he was talking today in today's conference led investors to believe that that might actually come a little bit sooner, as he is already headhunting for a few replacement candidates. So maybe not 5 years, maybe Jamie only really has 2-3 years left at the bank, but he's been at the helm of the bank, guys, for over, a better part of the last 20-25 years at this point, and has done absolutely amazing things for the bank. Still one of my favorite CEOs in America. The guy is an absolute legend. So when he speaks, you have to listen, and he's a very well-spoken individual, and he's very concise and blunt. He really doesn't, he really doesn't beat around the bush, so to speak, right? He really gets straight to the point and hammers the point down whenever he's very confident on something, right? So let's move into exactly what Jamie Dimon said today that led the stock to have a nice decline. So Jamie Dimon says JPMorgan stock is too expensive. We're not going to buy back a lot. Well, this is paraphrasing. He actually didn't say the stock was too expensive, but from the gist of the way he was talking about the buybacks, you could be led to believe that the stock was a bit too expensive. Now, let's get into exactly what he said. He said, we're not going to buy back a lot of stock at these prices. Now, let's dive further into the article. Here's what he said. I want to make it really, when analysts were asking him, Jamie, are you guys going to increase the buybacks? What are you doing with the buybacks, right? Here's what he had to say. I want to make it really clear, okay? We're not going to buy back a lot of stock at these prices. That was very, very negative for the stock, and it really cascaded into a landslide red day. The stock was previous at an all-time high starting the morning, and then when Jamie Dimon started talking, the market did not like it, guys. So let's dive in further here. Right? It also makes the stock relatively pricey as measured by price to tangible book value, a commonly used industry metric. JPMorgan shares traded recently for around 2.4 times book value. Here's what Jamie Dimon had to say about this. Buying back stock of a financial company greatly in excess of 2 times tangible book is a mistake, where we aren't going to do it. So essentially what he's saying, guys, is he is a more classic person in terms of buybacks, right? You guys obviously know that buybacks have been in place now for a better part of the last 10, 15 years. A lot of companies do them, but what it does is it artificially increases your share price, right? It gives you artificial financial metrics. It boosts your earnings per share by reducing your share count, right? So it can give an artificially inflated, basically snapshot of a company. And he's not for it. He's more of a traditional classical investor in terms of they will only increase buybacks, guys, if they consider the stock to be cheap. Now, it's not to say that they're not going to do any buybacks at these prices, and we'll see that a bit down below. Now, Diamond's guidance simply means it is unlikely the program will be boosted anytime soon. JPMorgan is likely to still purchase shares at a $2 to $2.5 billion quarterly clip. So they'll still be doing it. And here's what he concluded on. We've been very, very consistent. If the stock goes up, we'll buy less. Notice he didn't say we won't buy at all. He just said we'll buy less. When it comes down, we'll buy more. So he's really looking for value. He will only support the stock price floor. If it really starts coming down hard, that's when he will increase the buybacks. Is he still doing buybacks? Of course, all the major institutions are continuously doing buybacks, but he just doesn't want to spend all of the cash on something that he does not consider to be a quote unquote good deal for them. It's a very, very good use of capital, in my opinion, to just, taper back the buybacks and wait until the stock is cheaper. It does a lot better when the stock is cheaper to buy back as well, because obviously then your money buys more shares and reduces total float outstanding even more. Now, other comments made by the CEO, Jamie Dimon, today. Now, he was saying a few things, guys, in terms of the performance of the bank. So if you notice back here in the early April session here, we had a very, very big drop in JPMorgan when they had their earnings. And a lot of analysts and investors were concerned with the fact that the net interest income, the amount that the bank makes on its loans, was not high enough. And that was a big reason for the drop. Well, here's your guidance. Net interest income, or the difference between what the bank makes on loans and pays out on deposits, is expected to rise to $91 billion this year. That is above a previous forecast of $89 billion in April. So they have now officially raised their net interest income from what they actually guided on their earnings simply a month ago. That is a very, very bullish catalyst, guys. It just goes to show you that the bank is operating on full cylinders. Very, very good. And also, a few of their other divisions are also now being repriced to be outperformed. Take a look at this. JPMorgan estimated its second quarter investment banking revenue will grow by a percentage in the mid-teens, citing improved market conditions and a healthy outlook for deals. Revenue in markets, so their market-making activities, will climb by a mid-single-digit percentage, it says. These two lines of business are considered to be guidance upgrades. This most recent statement by JPMorgan today, guys, they are upgrading their guidance from the previously issued one in April. So this event on the day, in my opinion, guys, largely overdone selling, in my opinion. Most of everything that he said was very bullish. It's just the market did not interpret it this way. All of these financial metrics, right, have seen net improvements, net interest income, their market making activities, and their investment banking revenue. Now, the fact that he's going to retire a little bit sooner, yes, can be viewed as a negative event, but guys, that's still like 2, 3, 4 years away, right? Very, very long time still. And the fact that he said that they won't be increasing buybacks at these levels is not a bad thing. They're still going to do buybacks. It's just they're not going to increase the pace of the buybacks up here because they don't think that it's such a good deal to do so. None of those comments were overly bearish, but still, you guys know the market. Sometimes it overreacts, and it sent the stock tumbling about a 4.5%. Now, I did make a play on this drop, and we'll take a look at exactly what play I made towards the end of the video, where we take a look at my portfolio. That's pretty much it for your JPMorgan comments. Now let's dive right into our first earnings play that we have for today, which is Palo Alto Networks. So guys, you already know we covered Palo Alto last quarterly earnings, right? And this was an absolute disaster. However, what the company did back here is that they kind of sandbagged themselves for the future. They basically got all of the bad out of the way right away. Here is when they said, listen, 2024 is probably going to be a transition year for us, so don't expect us to raise guidance anytime soon. They basically tried to bake in all of the negative news right away. So this quarterly earnings, we were looking, has the company improved since their overly bearish statements back here, or is it just more of the same? Well, unfortunately for Palo Alto Networks, we are still just having more of the same, still a transition period for the company. Although they did have fairly good results on this quarter, their guidance for the remainder of the year is maintained roughly flat. So no improvements on a year-end basis, right? So let's take a look at their numbers, guys. It wasn't that bad, even though the stock is down about 8.3% in the after hours. You can see that right here. Big sell-off in the after hours, down about 8.3. Now let's take a look at some of their numbers. Their numbers for the quarter were actually quite good. They beat on EPS by about 5.6%, and they did beat on revenue by about 1%. That is very good, guys. The problem that Palo Alto Networks is facing right now is twofold. Number one, they're revamping their entire business. So before, this company used to be able to sell you 15 to 20 different cybersecurity products, depending on what you needed. They are consolidating their offerings into only 3 distinct segments. So they're doing a big consolidation. And obviously a lot of their clients, guys, well, they have to get accustomed to this new system, right? This new billing system by Palo Alto Networks, where it's really consolidating a lot of different systems into 3 distinct parts. And then those are the ones that clients will be able to buy. So a bit of a relearning process for Palo Alto's clients, but still a very good decision by them. They're simplifying the business, which is actually what you want to see. The second problem that they've been having is a problem with cybersecurity as a whole. Increased inflation, increased prices means that companies have less money to discretionarily spend across different software services. So a lot of even big companies, guys, have been pulling back their resources on spending on new cybersecurity ventures. And that is what Palo Alto was saying last quarter. It's what a lot of cybersecurity companies said already this quarter, and that has not changed. 2024 should be a fairly light year for cybersecurities, as companies are still kind of, timid about what they spend their money on, right? So let's take a look at some of their financial metrics as a whole. In terms of their financials, guys, the company's really solid. Still one of the best in all of cybersecurity, in my opinion. Great free cash flow, guys. Not a lot of debt. Great cash on the balance sheet. Very decent. And this quarter was more of the same. They are in a very strong financial position. If we take a look at their growth as well, their growth is very good. Take a look at EPS expansion for the next couple of years. Very good earnings per share expansion and very decent revenue expansion as well, guys. The company is moving in the right direction, and the company has just now turned a profit in the last year, right? This company was not profitable for a very long time, and they are finally turning the quarter to profitability. They now have about 6 quarters of profitability in a row, and they do expect that to continue. So what is the reason for the drop? Well, the reason for the drop, guys, most simply is the guidance. The guidance was a little bit light. So even though their numbers were okay for this quarter, the guidance just wasn't what Wall Street wanted to see. Now, Palo Alto Networks shares were falling in Monday's after-hours action as the cybersecurity company failed to sport much upside with its latest quarterly forecast, which bracketed the consensus view. So they really said what they were saying last quarter, no improvement in guidance, unfortunately, right? So a lot of people were expecting a turnaround story, thinking maybe last quarter they did a bit too much damage. They were a little bit too bearish on their guidance. Well, turns out that they were actually on point with their guidance, because now they're reiterating the same guidance for next quarter and also for the full year. So take a look at this. Palo Alto Networks' 4th quarter forecast, which is the next quarter. They run 2 quarters ahead in terms of annual for revenue of about 2.15 to 2.17 billion. The analyst estimates was 2.16. So the midpoint is right in line with what analysts are expecting for the next quarter. Now, in terms of billings, right, how much money the company is able to secure in future deals, the billings was about 3.43 to 3.48. That's the company's guidance, and Wall Street was looking for about 3.45. So still in the midpoint. So the guidance for next quarter is pretty much flat. No increase, no decrease, just pretty much flat. So not enough to really give you that juicy gain in the after hours, right? So this report follows a disappointing one 3 months ago when Palo Alto Networks slashed its full-year outlook. The company attributed the move at the time to its emphasis on platformization. Platformization is just basically them consolidating all of their different services and products into 3 distinct products, right? So it's that consolidation they're talking about. Now, Palo Alto Networks, here's the full year guidance. The full year forecast is for 10.13 to 10.18 billion in bookings, right? So the analysts were expecting 10.1 to 10.2. That is literally right in the middle, guys. So no change on the yearly guidance. And here is your revenue, 7.99 to 8.01. Analysts were looking for about 7.95 to $8 billion. So still, guys, right in line. No change on next quarter's guidance, no change in the full year guidance. And unfortunately, guys, it just wasn't enough to really give that stock price some lift. So as we've seen so many times this quarter in terms of earnings so far, guys, even though the company did a great job at this quarter, it beat the numbers for this quarter. If the guidance is not perfect and being raised, you can expect a decline in the stock price. And that's exactly what happened in terms of Palo Alto Networks today, right? So in terms of their financials, guys, they're really not that bad, right? They're the industry leader. They're pivoting the business model. As we've said, 2026 to 2030 is when the company expects the biggest gains out of this pivot that they're doing from the business model. The management is very, very solid, strong balance sheet as well. We saw that. Very good free cash flow too. Nothing bad to say about their free cash flow. As a matter of fact, guys, I had the investor slides pulled up here. You can see that they pulled in another almost $500 million of free cash flow. Everything doing very, very decent. But the one thing that Wall Street was not happy about, guys, I'll show you. It is this number right here. Take a look at your billings growth, right? The billings growth is not there. Usually it's double digits, which was very healthy. It's just not there. Services coming down ever so slightly, right? Even RPOs, that's remaining performance obligations, how much money the company is in the pipeline for future deals. That as well is relatively flat, and pretty much your annual recurring revenue growth also is slightly down. So it just goes to show, guys, that the company did warn us about this. They warned us that clients would be spending a little bit lighter on cybersecurity for 2024, and this is exactly what's happening right now. So a little bit of a transition period for the company, but 2025, as we've said, guys, 2025, 26, all the way through 2030, that should be the return of the cyclical nature of this business towards very good growth, very good profitability, right? So where does it leave us in terms of valuation, guys? Well, I did the analysis here at about 291. So we can see here that pretty much their 2024 PE ratio is fairly high at about 53. But when we take their PE as an expression of their EPS growth, that gives us a PEG ratio of about 2.4. Now, 2.4 is not the cheapest. I will agree with you guys. It is still a little bit expensive, right? Anything under 1 is fantastic. Between 1 and 2 is okay. But above 2, guys, you have to really ask yourself the question whether or not this is the best deal in the market. Still like the company, guys, but the valuation, in my opinion, is just a little bit on the expensive side. Personally, I would like a lot more down below in the 250, 260 zone. Not to say that it's going to go there. That's just where I would really appreciate the valuation a lot more. In terms of the technicals, guys, well, we did pull back a little bit today. This company is really doing some consolidation here on the monthly, right? I would not be surprised if this company is kind of maintained in somewhat of a tightening range, right? It's going to be very tough for this company to really start breaking out beyond the all-time highs if it's in a transition year, right? It's going to be very tough for Wall Street to give it excessive valuations above this if the company cannot say that it's consistently growing quarter over quarter and really accelerating these numbers that are on the decline right now. So that's just my 2 cents on the stock. Very good stock, but a little bit expensive in my opinion, right? So that's pretty much it for Palo Alto Networks. I will be looking for some follow-up trades, guys. Because of the strong dip on this one, I'm going to be looking out for some plays, maybe some different stocks in cybersecurities that could be affected by Palo Alto's drop tomorrow. Maybe Fortinet. If we can get Fortinet down below here in the 55 for some short puts, could be a good play. Going to be looking at NET, right? Cloudflare could be an interesting play if we can get some short puts in the high 60s, mid 60s off of a drop tomorrow. That could be an interesting play as well. So I'm going to be looking at a lot of those tomorrow, guys, in terms of potential plays on cybersecurity from this most recent dip. So that's pretty much everything we had in terms of our news event from JPMorgan, and now also our earnings analysis on Palo Alto Networks. Now let's move right into our index analysis, guys, shall we? So in terms of the indexes, guys, everything's still looking very, very healthy. However, just be wary that we are getting a little bit top heavy right now, right? A little bit overbought on the daily, on the SPY, and even our shorter term time frames, guys, the 4-hour is slightly overbought. The hourly, not overbought anymore because today was virtually a consolidation day, but still the daily and the 4-hour are showing signs of being a little bit overbought. So if ever we lose this 12 EMA on the 4-hour and set the 4-hour downtrend, you guys obviously know that your daily consolidation will just be underway. And at this point, guys, anything above 519.75, we will just be looking for that daily higher low for potential further trend continuation. Now, if ever this week turns maybe a little bit bearish and we get a daily downtrend continuation, guys, Well, at that point, we're just going to be looking out for the weekly higher low on SPY. Tons and tons of space, guys. The bulls are in full control right now. Anything above 495, just going to be looking for that weekly higher low for further trend continuation. So the markets, in essence, they can afford a little bit of a pullback. Keep in mind your first line of defense for the bulls will be this level right here, right? Your previous all-time highs at about 523. Your 12 EMA is right there as well. So look at that for the first line of defense for the bulls. But if ever they're not able to break the all-time high and roll over, then you guys must understand that we are in for a little bit of weekly consolidation after such a nice 4 weeks worth of rally. So all in all, guys, markets still looking a little bit healthy, but I would not be surprised for a short-term pullback. Now, moving on to QQQ. QQQ, pretty much same analysis, right? So QQQ, very nice daily uptrend going for it right now, right? We're just looking at this point. This is a clear daily break above the all-time high. SPY didn't quite get it yet, right? Which is why we can't say this is the daily high or low, but QQQ definitely did get it. So very nice daily uptrend. Still just looking any pullback at this point whenever this move tops out, looking for the daily high or low. Anything above 449.88 will be for that daily high or low for the further trend change. Now, this area is very close, guys. So if ever tomorrow we lose this area and we crack it, it may be setting up for that daily downtrend into a little bit of consolidation. Now we do have previous all-time high here, previous resistance. It'll be support. That's about 447. The 12 EMA is right there as well. So could see maybe a little bit something like this. And then if we continue the rollover, same thing as the SPY, guys. The bulls on the weekly have so much space. Anything above 412 or 414 pretty much just going to be for a weekly higher low for further trend continuation. So all in all, everything looking very good, guys. But just once again, just want to reiterate, I'm still bullish. I would not be surprised, however, if we just get a little bit of a short-term pullback here, really cool off this weekly momentum a little bit and reset and then get another little run at it. All in all, guys, looking very healthy. That being said, we could just completely continue blasting off to the top and I would not be surprised as well. So just going to be very patient. And the key is, once again, to find the stocks that you like the most. And if they're still at very good prices, we need to be very diligent on what we're paying for these stocks, right? A lot of these stocks still have very good deals. Think of Meta, think of stocks like Microsoft, even stocks like Amazon, right? Even though they're close to the all-time highs, if we do get some dips, those are going to be very good opportunities to aggressively buy the dips for the continued eventual weekly rally into the remainder of this year, right? And even monthly continuation as well. Moving into financials obviously led by the downside by JPMorgan today. No secret there, right? So financials were on a beautiful daily uptrend right here. Still looking for the daily higher low, anything pretty much above 41.61. Looking for that daily higher low for further trend continuation. Now, the bears, with this 1 day of movement, have taken back a lot of the move. So if ever we roll over, get the daily downtrend, is that big of a deal? No, just looking out for the weekly higher low, anything above 40.2, weekly higher low for the continuation of the weekly trend. Now, this red box right here, prior all-time high resistance, is going to be acting as some very juicy support. So I do expect the bulls to put up a very decent fight in that area. Most of all your moving averages on the daily are in that section as well. So if we do get a little bit of a pullback, guys, it is just that, just a little bit of a healthy pullback. All in all, financials still looking very strong, especially since we're coming into the period of potential rate cuts later on in the year. I do believe financials will just accelerate the pace of their gains as the year moves closer and closer to that rate cut point. Give me a very quick second. Whoops. All right, now we're back. All right, so moving on to XLV Healthcare. XLV Healthcare not looking too bad either, right? Gorgeous daily uptrend. The bulls still in full control, still looking for that daily higher low for further trend continuation. The bulls very much in control, just some sideways consolidation. Even if we pull back a little bit more, still looking for that daily higher low. Where could it manifest potentially, guys? Well, take a look at this yellow line right here. Prior support right back there could be acting as support again. And if we just come slowly down into it, your 12 EMA will have time to curl up into this area. Probably a nice area for a first touch and potentially go on to capture potentially close to the all-time high levels. So all in all, healthcare looking very good. And the size of the weekly bounce, guys, is now very juicy indeed. Put the fibs on this, you can see that the bulls have now recaptured over 80% of the move, which leads us to believe that even if there is some short-term daily weakness and we lose some of these short-term levels here, it'll just be for a very healthy weekly higher low for the eventual weekly trend change back to the bulls. Healthcare still looking very strong. Now, moving into semiconductors, guys, and this is where it gets very interesting, right? Semiconductors this week, because everybody knows we have NVIDIA earnings on Wednesday after the close. That will be your market movers for semiconductors. Now, moving into the index as a whole, still looking very, very good here, guys, right? Daily uptrend, clear as day. Your most recent daily higher low is right here, 228.64. So as soon as this move tops out, just looking for a daily higher low for further trend continuation at this point. Obviously, with such a big market moving event on Wednesday, guys, anything can happen to this index. If ever we continue this daily uptrend into Wednesday and NVIDIA has lackluster earnings, well, you could see a heavy pullback, something like this. Well, it won't be that pronounced, right? But you could see a little bit of a pullback, something like that. And obviously, if NVIDIA has amazing earnings, well, this continuation will just continue to churn on and grind higher. That being said, you have to know who's in control. The bulls are in full control. So even if we get a notable pullback after NVIDIA earnings, something like this, guys, is it that big of a deal? No, because the bulls have completely engulfed what the bears tried to do. Weekly downtrend, fully engulfing move, and we still have not set the weekly higher low for the trend change reversal back to the bulls. So if ever we do get a little bit of a sell the news event after NVIDIA earnings on semiconductors, that could be your cue for the weekly higher low for the potential weekly trend change. That would be a very juicy trade opportunity, guys. If we get a little bit of a pullback into this area, very nice trade location. Keep an eye on stocks such as NVIDIA, AMD, and others, right? If they all have a severe pullback, it could be a great time to buy some of these weekly higher low attempts for that eventual trend recapture later on in the year. In terms of NVIDIA earnings, guys, I don't think NVIDIA will have bad earnings, but you have to keep in mind, there is a lot of growth that is priced into this current earnings, and NVIDIA cannot really buck the trend of what the market has been showing recently. The market, even though companies have been performing good on this quarter, the market cares about future guidance and future expectations, and NVIDIA's future guidance is very, very high already. So if they don't raise the bar on already high guidance, the market may just not like it, and it may cause the stock to pull back, even though the NVIDIA earnings are going to be very bullish, even though they'll be bullish on the industry. The fact that they don't guide excessively higher and higher, it may just hurt the stock in the short term, but it's not a very big drawback for the business as a whole, in my opinion. Now, moving on to IWM Russell. IWM still looking very, very decent, right? Up about 0.22% on the day. Daily uptrend is very gorgeous at this point, right? Still just looking for that daily higher low for trend continuation. Now, if we break this high right here, 209.65, no problem. Your daily trend continues, and we're going to be targeting the 212 area of resistance. However, if we fail and set the daily downtrend, potentially fail these highs right here and set the daily downtrend by breaking these lows, is it that big of a deal? No, you guys should know the drill by now. Take a look. When in doubt, zoom out. Take a look at your weekly uptrend. They lost it, and now we have this beautiful bounce attempt to try and recapture this by the bulls. So if ever we lose our shorter term timeframes, not that big of a deal. We'll just be looking for very healthy weekly consolidation on the Russell, guys. Anything above 191.50, just going to be looking for that infamous weekly higher low for further trend continuation. So if we can't get this move done here, smashing through 212 in one clean motion, may just have to two-step this whole process. And this little breakout retest entry trade right here, if it gets back down about 201, 200, could be a very decent trade opportunity, right? Where your stops would go down below the lows here, and then you're obviously targeting the area of the breakout of the 212 location. So looking very good as a whole. Excuse me. Now, moving on to the Dow Jones, our last index of the day. So moving on to the Dow Jones still looking relatively very healthy, though. It did have a little bit of significant drop because of JPMorgan right today, but still looking very, very attractive is the Dow Jones. So very healthy daily uptrend, guys, right? Any move lower, just looking for a daily higher low, anything above 39,400, looking for that daily higher low for further trend continuation. If ever it comes back too low and we set up for the daily downtrend, is it that big of a deal, guys? You already know the drill. Know why? Zoom out. Look at the weekly, guys. Heavy engulfing move by the bulls right now. So if ever we start losing ground on the daily, set the daily downtrend and start revisiting some of these lower levels like the 39,000s, no biggie, guys. Just going to be looking for that weekly higher low for further trend continuation. Keep an eye on your weekly 12 EMA right down here at that 39,000 level, guys. Should be the first area of touch and potentially run for the bulls, in my opinion. All in all, looking extremely healthy, just coming off slightly overbought conditions on the RSI on the Dow Jones. And the Dow Jones, right, Sometimes it can stay overbought for extended periods of time, but for the most part, guys, it doesn't really do this, right? This is a little bit of an outlier. Usually it just gets a little bit overbought before pulling back, right? You can go back in history and test this. The Dow Jones is not the NASDAQ, so usually when we have short-term overbought conditions, it does tend to have a little bit of pullback motion, right? So that's all in all good for that. Now let's move into crypto, because crypto definitely did something today. So looking at Bitcoin, massive price action to the upside, guys, breaking out of our zone, breaking out of this 66,000 level that we wanted it to. Healthy daily uptrend for Bitcoin going right now. And now, guys, the weekly, look at this gorgeous engulfing move on the weekly. It was a weekly downtrend. And now look, how much of this move have we recaptured so far? Almost 100%. You can put the fibs on this and you'll see 100% of the move recaptured by the bulls, looking extremely good. Even if we can't break this all-time high right away and we have to consolidate a little bit, right? Something like this, just going to be looking for that cup and handle formation, right? Retesting maybe, and then running. So looking very strong on Bitcoin. Nothing bad to say. The whole time, this is exactly what we're saying, guys. This was really just a hell of a weekly bull flag, right? It was looking very good, just looking for that monthly consolidation, coming back in your previous all-time highs, pull back into it, and then moonshot. So that's what we're looking for in Bitcoin, and seems as though the bulls want it. But as I said, even if we don't break through this area right away and we start consolidating a little bit, that's not that big of a deal here, guys, right? The weekly breakout pattern is well in motion. They've created a ton of space off these lows. So if anything, if we don't get this clean break, guys, could just be in for the two-step recovery process of this weekly uptrend, looking very good. Ethereum largely looking the same. Ethereum getting a massive boost today here after the Ethereum ETF news. The probability bump for an Ethereum ETF went from 25% to about 75% today and really carried this thing massively higher, guys. 20% move on Ethereum. That was enough to take out most of your levels of resistance in one clean motion, right? So we're kind of trapped in this massive daily downtrend for the longest time. And now, happy to say, guys, the daily bulls are back in control, well above our moving averages. So any move lower, just going to be looking for that daily higher low for further trend continuation. On the weekly's looking gorgeous now, right? Weekly downtrend. And look at this massive engulfing move from the most recent guy who started the third leg of selling here. 100% engulfing move. So even if this takes a little bit of a breather, guys, an extended breather for even up to 2 weeks, just going to be looking for the weekly higher low for the eventual weekly uptrend shift back to the bulls. And it really does appear now that our monthly higher lows are set on Ethereum, looking very good for that monthly uptrend continuation. And the next level, guys, keep an eye on this, right? We're currently battling still with the 3,600 level. The next level after that, guys, we have one short stop at 38, and then it's all the way to the all-time highs on the monthly. You can even see that best on the weekly. Not much resistance left after this. And the next one is really at the all-time high. So Ethereum looking very good, finally getting that breakout after being left behind on in relation to Bitcoin for weeks and weeks, arguably even months at this point, right? So now moving into our big tech names, Apple still looking very healthy today, right? Apple up about 0.62%, gorgeous daily uptrend, nothing bad to say about this company whatsoever, right? Daily higher low is set. Higher highs. So now our daily higher low is set with the low of today's trading, right? So anything, as soon as this move tops out, any move lower, just going to be looking for that daily higher low, anything above 189, daily higher low for the potential trend continuation. However, if we roll over from these levels and set somewhat of a daily downtrend, is it that big of a deal, guys? When in doubt, zoom out. You can see what's happened on the weekly here. Weekly was a massive weekly downtrend. The bulls have since engulfed the move, and this is one clear weekly move higher. We still have not set the weekly higher low for that weekly trend change. So if anything, if we do lose these shorter term timeframes on Apple, come down into maybe the lower 180 levels, I think that's a very juicy swing trade opportunity, guys. Just going to be looking for the weekly higher low for further trend continuation. All of our supports are down there. The moving averages are down here, and this massive level of previous support, which was support back here, resistance right here. This 181, 178 pocket is so juicy. If I see Apple pull back in this area, I will be taking the trade right here for the continuation of this later on in the year. So Apple, all things considered, looking extremely healthy. Give me a quick second. Thank you for understanding, guys. Need to get the coffee in, right? Now, moving into AMD. AMD stands to move more than most because of NVIDIA earnings this week. All in all, though, AMD is doing its thing on its own right now. Daily uptrend recaptured by the bulls. Very healthy, right? We were stuck in this daily downtrending pattern for pretty much 2 months at that point, right? Finally able to get back above. We're above a few things right now. Not only are we in a daily uptrend, but we're also above all our major moving averages, and we are still slightly above this big zone of resistance, right? This red box, which was 165 down to about 158. We're above that now. However, the bulls may need to come down a little bit, set that daily higher low, and get that momentum and really smash through this, continue this daily uptrend. In terms of the weekly is also not looking too bad, right? Weekly downtrend, leg number 3, and now we have a nice leg up on the weekly. So still, and eventually, guys, whenever we lose this daily uptrend right here, let's say we set the daily downtrend, just going to be looking for that weekly higher low to start a new weekly uptrend. We have not had a weekly uptrend, guys, on AMD stock since pretty much the end of February. So it's been a very long time, but I do believe now that we are starting to curl. So some of these last entries, guys, may just be that, the last chance to dance if you are wanting to get some AMD stock at some cheaper valuations. I'm going to be looking for that daily higher low right here. If we can see maybe 160, 158, that's where I'm going to be trying to make a trade on AMD and try to ride this stock back into the higher levels, talking the 180s, 190s, and even as far as the all-time highs. So these entry levels are looking very, very juicy in my opinion right now. Moving into Amazon stock. Amazon pulling back slightly on the day, 0.63%. Amazon just couldn't keep it up today, right? They started the morning off not too bad and then kind of faded all the way into the end of the day. But that's okay, guys. Amazon, has had a heck of a rally so far. So it's just taking a little bit of a breather right now. So Amazon currently trying maybe to set the daily downtrend, guys. And we talked about this in last week's video as well. It was a gorgeous daily uptrend right here. And we were trying to see, can they set the daily higher low and just continue this daily uptrend? Or maybe if we roll over and cut these lows, it'll be a daily downtrend at heading into a little bit of weekly extended consolidation. So far, it does appear to be the latter, a bit of weekly consolidation, but the bulls are healthy. Anything above 166.50, just going to be looking for that weekly higher low for further trend continuation. Where do I think the bulls may find a stop is going to be where that 12 weekly EMA is. Look how well Amazon has defended this 12 weekly EMA since the rally started last November, guys. That's why I think this 180, 178 pocket right here, very juicy trade opportunity to pick these lows to get that next leg higher. So all in all, even though Amazon is consolidating a little bit, in the grand scheme of things, the monthly looking extremely bullish. The weekly also looking extremely bullish. Gorgeous weekly uptrend. Just looking for that next leg higher on Amazon. Still unable to break above our all-time highs. Still finding a lot of that resistance, right? Eventually Amazon will. And when it does, you guys know it is probably heading to that 200 level psychological resistance. Now moving on to Google. Google, what an absolute monster, right? Google has been on an absolute tear here pretty much since the early part of March. Look at this stock, guys. It's up 36%. Absolutely ridiculous gains for Google. And the daily uptrend just simply continues at this point, right? Gorgeous daily uptrend as soon as this move tops out, which it might be topping out soon, guys. Daily overbought conditions, right? And as soon as it tops out, just looking for that daily higher low for further trend continuation. Anything above 165.50, daily higher low for that trend continuation. And even if we lose the daily trend and head into a daily downtrend, guys, is it that big of a deal? Nope, because we have tons and tons of space on the weekly, guys. Look at how much space we have on this weekly. Anything above 165.43, looking for that weekly higher low for further trend continuation. So even if Google takes a couple of weeks of worth of a breather, it would not be that bad of a thing, guys. Just consolidation at the top end of your all-time highs. Very, very, very bullish company. And the valuation is really not that bad either. Gorgeous monthly uptrend, no secret there. So all in all, the bulls control every single time frame, guys. I'm going to need to see a much wider pullback on Google if I'm to get interested myself. First, I will need to see a daily downtrend, and then I'll be looking to maybe take some of these weekly higher lows maybe down here. I know we had them a few weeks prior, but keep in mind, guys, a few weeks prior, right, towards the end, before Google earnings pretty much, the market was fairly rocky, right? SPY and QQQ were down a lot. Google wasn't down as much as them, but then really after their earnings is what kicked off this most recent move for Google. So congratulations to all the Google bulls out there. All right, now let's move into Meta stock. So Meta also performing a little bit red on the day, 0.65%, right? Meta has been trying to recapture as much of this earnings move as possible. Gorgeous daily uptrend. Higher lows right here, 462.50. If for whatever which reason, guys, we are unable to set the daily higher low and continue the daily uptrend, let's say we lose this pattern and set the daily downtrend, just going to be looking for Meta to try and set a weekly higher low and get the weekly uptrend back, because obviously we lost it right here, right? Weekly uptrend, loss of the lows right here. Now Meta has been trying desperately to get that back. And the size of the bounce is not too bad. It's not as good as Netflix's bounce, but at least it did bounce about 50%. And since the stock is so strong, guys, I would be very surprised if we see Meta roll over something like this, right? Most likely the bulls will be able to set that weekly higher low and go on for the weekly trend change. It may just take a little bit longer than anticipated. Meta really struggling right now with the moving averages and with overhead resistance at 480, right? This is a very crucial level for Meta. So even if we do see a little bit more sell-off here, guys, don't get too worried. If anything, it does represent a very juicy buying opportunity, trying to pick that weekly higher low for further trend continuation. In my opinion, this 26 EMA right here on the weekly, 440, could be a very good location. Look, Meta had really never lost the 26. Look at this orange line right here, right? Never lost the 26 EMA on a weekly close ever since they started their massive recovery in December of 2022. So looking very good for the stock. That would be my next point of juicy entry for this company. And obviously, guys, the bulls are still in control, right? We haven't lost these lows, so they still do have an opportunity, guys, to put in one or two very bullish candles, get us above the moving averages, get us above this point of resistance, and really start getting more and more space for your bulls to eventually set that weekly higher low and recapture this weekly uptrend. Now moving into Microsoft. Microsoft not looking too bad either, 1.22% to the upside, looking very good. Gorgeous daily uptrend on Microsoft, right? So any move lower right now, let me just readjust this line right here. So any move lower, guys, just going to be looking for a higher low, anything above 418.29. Just going to be looking for a higher low for further trend continuation. Really nothing in terms of red flags for Microsoft stock right now. One little juicy trade could be if Microsoft loses this level and starts retesting some of these moving averages or the top end of this range of support. This is what was trapping Microsoft before, right? If we can come back into here, maybe a play for some short puts under pretty much 410 to around the 405 range seems to be like a juicy swing trade opportunity for me, right? And even on the weekly, guys, the weekly is looking extremely bullish, right? Tight range of consolidation, tried to break out, and we got rejected. And now what are we trying to do, guys? We're trying to make a second attempt at this weekly trend continuation, right? At the continuation of this weekly trend, higher and higher, close to the all-time highs. All-time highs around 431. We're almost there. And that would just be for very healthy monthly continuation of this gorgeous trend. No red flags on Microsoft whatsoever. I would just need to see a little bit more of a dip to get interested. I played Microsoft a couple times back here. But up here, you know, the levels are a little bit too high for me. I would really need to see a heck of a dip down here into the lower 413s and start maybe playing the 410s, 405s on the short puts. Now moving into Netflix. Netflix, total crush day for Netflix. Look at that performance, guys. 3.18% to the upside. I mean, this is what we needed to see from Meta, right? Daily uptrend clearly in motion right now. As soon as this move tops out, just looking for a daily higher low, anything above 606.50, just going to be for that daily higher low for further trend continuation, looking very good. And we're now pretty much above our 52-week highs. So if we can put a little bit more space between us and those highs, it could provide us a very nice level to be basing an entry off of, guys. This is your breakout retest trade. This retest location here for continuation long is a very high probability trade. Your stops would go under the daily higher lows right here, and your next target would be the next resistance, which would be your all-time highs. So take profit area would be around 690, right? If you put that in perspective, this retest trade, maybe you only have about, you know, let's call it from 630 down to about 605, let's call it $25 worth of risk, and then 630 to 690, that's about $60. So you have $25 worth of risk, $60 worth of upside. That is well above a 2-to-1 reward to risk. Those are the types of trades I'm looking for, guys. Very juicy trade opportunity, swing trade opportunity for Netflix, looking very good. And on the weekly, guys, you guys already know the weekly is looking extremely healthy, recovering all of the earnings crush, you know, that happened after the earnings call, and now looking very good. If ever they're not able to continue this any further and come up top, sit, and then run, well, we may just have to do the two-step process, consolidate a little bit, come right back down around the 610, 605 level, and then, guys, it may be just a juicy trade opportunity, weekly higher low for that eventual weekly trend change back to the bulls. All in all, Netflix looking extremely strong. Now let's move into NVIDIA. NVIDIA also looking very good today as a whole, 2.5% to the upside. Really looking extremely strong leading into earnings here, guys, right? The all-time highs are very close, talking about 970. We're almost there. Only 2 days left of trading for NVIDIA, guys. So any of the price action levels I give you today are kind of meaningless, right? The expected move on NVIDIA for earnings is about 9-10%. 9% up, 9% to the upside, guys, would put us pretty much, right around, 1,050, right? Just going to blow past the all-time highs. But 10% to the downside from here could be a retest of the 850 area. That's why I say the short-term price action does not matter. Even if we're in a daily uptrend, if earnings does this, we'll just lose the daily uptrend and we'll be watching to these support levels to really come into play as they did in the past. So at least NVIDIA has one thing going for it. And that's the fact that since the moment that this rally started back again, right? We've created a ton of space off these lows. And as a matter of fact, a ton of space above that big level, 850 that I was pointing out before. Huge support level for the stock. We're now about 10% above that. So if earnings are underwhelming, to say the least, maybe we only see a weekly pullback into this level right here. Could set up for a gorgeous weekly higher low for the continuation of the trend later on in the year, guys. That is the trade that I may be looking for here, guys. If we can see NVIDIA come back down to this level, weekly higher low, that is going to be a juicy swing trade opportunity for the future gains later on in the year, in my opinion. So let's keep an eye on how NVIDIA trades leading into earnings, and then after earnings will be the time to make the trade. Now moving on to Tesla, give me another quick second. Tesla down about 1.41%, still struggling, guys. Tesla is really battling right now, right? In the last 10 days of trading, the stock virtually hasn't really done anything. So still in a daily downtrend right now. The bulls are trying to get the daily uptrend going. That would be a break of this candle right here, break of 180, and we have a daily uptrend, and we can finally start putting in some moves to get maybe a weekly uptrend going. That is what the bulls are looking for, looking to set the weekly higher low right now to really get some weekly momentum going on this stock. All in all, the bulls have a lot of work cut out for them still yet, right? Number one, we need to maintain above these levels here, guys. 161, 160, last line of defense. I understand that we're just in weekly pullback mode, looking to set the weekly higher low, but if you take back too much of this move, it opens the door for the bears to just roll this over once again. Now, let's hope the best for the Tesla bulls, right? But step number one, need to see a break of 180. Break 180, daily uptrend is resumed at that point. You create a decent amount of space off these lows right here, 167, and then we can talk about the capacity to start testing some of these weekly moving averages, giving us a weekly uptrend. And then, and only then when we get the weekly uptrend, we can say maybe the monthly lows are actually in. But until that time, nothing is confirmed. The bulls still have a lot of work to do. One thing's for sure, if we get a very quick spike down off of some bad news on Tesla, that is the only time I may be playing some short puts down here. But as a whole, guys, I've just been staying away from all the interest rate sensitive stocks. That's nothing bad to say about Tesla. It's just me as a whole. Anything consumer discretionary or anything that requires financing or let's say cars or EVs as a whole, or solar panels, stuff like that, I'm just not trading. I just think that there's still some time to build positions in those trades. And there's a lot of other opportunities on the table right now that we could be trading instead. That being said, best of luck to all of you playing Tesla. I really do hope that this is the bottoming out process for this stock. Now moving on to Palantir. Palantir still just trying to battle here after its earnings, right? Really doing nothing in the last 4 days. So Palantir still trying to set up for the daily higher low for the daily trend change. We really need a break right now of 22.13. Give me a daily candle close above that. Daily uptrend is underway. And then we will have to battle with this following level of resistance right here, which is the infamous $23 line. The reason that's important is because it was big support back here. Resistance again. So this is going to be the name and the game for Palantir right now. If we can get a nice daily momentum move into this level right here, we will be recapturing a lot of this downside from the earnings and could be possibly setting up for the eventual weekly uptrend recapture. But it's going to take a while on Palantir, in my opinion. This earnings move down was very violent, right? So still need to set a lot of things in motion. Need to get that daily back, and then need to get the weekly trend back as well. And only then can we say the monthly higher low is finally set and that we're maybe ready to start attacking these $28 levels. One thing's for sure, as long as the stock remains 21 down to about 19 bucks, I still think that's a very juicy swing trade level for Palantir. Now moving into PayPal. Lastly, PayPal trying its best to break out, guys, but PayPal just not really having much momentum at all, right? Daily downtrend clear as day right now. The bulls are trying to to sit up for the daily trend change. This move right here, need a break of this candle right here. 65.50, if we can get that daily uptrend in motion, could get some legs on the potential weekly recapture, guys. But PayPal, it's just not looking the strongest. It's tried and tried and tried to break out of this 66 level, guys, but the market will just not allow it, right? So what we need to see is a sustained weekly move higher, get back above the 50 EMA, start closing some weekly candles in this level. You can see only one weekly candle has successfully closed above the $66 level. In my opinion, this is the price level that PayPal needs to secure before maybe starting to really move higher into the $75 range, right? We need to secure this first. And so far, the bulls are just not having the best momentum to do it. Let's see if they can get it done on this try. If not, if for whatever reason we fail, guys, and start trending lower, I do believe there is a nice swing trade opportunity towards the lower $60 range for PayPal. If you are patient enough, this is still going to be a transition year for the company. So all in all, I'm really not expecting the stock to make leaps and bounds to the upside, but at least if we can start just grinding the levels higher on renewed optimism for the stock, that is going to be best case scenario for PayPal this year, in my opinion. So that's pretty much everything I had for you guys in terms of stocks today. Now let's take a quick look into my portfolio for my trades. All right, guys, so taking a look at the portfolio, the outperformance versus the indexes just continues at this point. We are now up 17.86% over the course of the year. I'm not too sure why we took such a heavy dip from Friday, guys. The account was only down about $100 for today. Somehow it says we're down 1%. I don't think that's accurate. It may just be because I have some after hours earnings plays happening, especially Palo Alto, and maybe it's just misinterpreting that. But as a whole, guys, we are actually above 18%. We should be standing about 18.2% year to date, which is still well above our SPY, currently at about 11% for the year, and even above our QQQ's NASDAQ, right? NASDAQ is only about, still up about a healthy 11.5% on the year, and we are just continuing to outperform. So all in all, guys, very, very healthy portfolio performance over the course of last week. And I apologize for not making the Friday video, guys, but let's take a look at some of the positions that we were able to close leading into the Friday. Everything pretty much ending worthless. We just captured all of the profit on all the plays we had last week, right? The Applied Materials ended worthless after their earnings. Elf Beauty never got to our strike price. The Googles as well. The SoFi calls, we were called away on that position as well. Looking very, very juicy there. We made about, over $700 on SoFi for being assigned in the stock for almost about 2 weeks and a half. Very, very juicy position for us. That was like a 10% play, guys, in 3 weeks. So 3% per week. I'll definitely take it. Squares ending above our assignment price as well. So no impact there. Take Two Interactive and even the Uber. So everything that we had rolling into last Friday, everything expiring worthless. So we pretty much just collected all of that juicy premium. And the plays that we have set up for this week so far is number one, we still have some Palantir covered calls. We rolled those last Friday, and now we got an additional about 28 cents from them from their price last Friday. So fairly good. Our average cost on Palantir right now across all our shares is about 20.2. So we're really up on the stock right now. Can't complain at all. Stock is about 21.62. So we're up about $1.40 per share on about, 600 shares. That's very, very good profit rolling on Palantir. So as it maintains this relative range around 21.5, I'll just keep rolling my covered calls on a rolling basis and continue generating that juicy, juicy premium. Then we got in a bit more into SoFi, guys. I actually had 10 contracts on the bid for about 5 cents. Now, obviously, guys, we got commission to pay as well. So that's why you only see we got filled at about 4 cents, but I was just sitting there on the bid for 5 cents at the $7 strike all day, 10 contracts, only 4 of which filled. So I'll leave those open for the remainder of the year. I still think SoFi is a very good bet at $7 range, extremely good support area. We also took one more trade here today. We took the Albemarle puts. Now, in terms of today, guys, and the day where the most of the market was green, I was really patient on the day. I was really waiting for the opportunities to come to me. And these are the few of the ones that I found. I still have a lot of buying power left on the table for the remainder of the week. So you'll see the positions that I took, guys, fairly light leading at the beginning of the week. Albemarle, 123s. I'll just go into Albemarle stock. 123 is right down here, guys. So really in line with this pocket of consolidation, right? Fairly good stock. Obviously, guys, lithium manufacturer, so they should be doing quite well. And I was fairly happy with the risk reward of this trade. We took this trade midway through the day, right around down here when it was around 127. And as you can see, guys, we're already in profit in the position. We got about 60 cents for them, and they're down to about 40 cents. So we're already up a little bit. We'll see how those do for the remainder of the year, remainder of the week, sorry, one contract. Then we went with the Amazon 180s. We were saying that in yesterday's top 5 video, looking for the Amazon 180s on a dip from Amazon. And pretty much Amazon, when Amazon was trading down here in the lower 183.60s, 183.50s, I found some okay premium on Amazon. Now, it's not quite 0.5%. 0.5% would be about 90 cents, but I was fairly happy just because Amazon is such a solid company, guys. I took 70 cents for it and would not mind being assigned the shares at 180 anyway. So we'll see how this one plays out for the week, but fairly happy with this one nonetheless. Then we took some Elf Beauty. Now, Elf Beauty was going to be one that I'm going to average into before earnings, because you guys know that I will be playing earnings on this one, obviously, but still, it did start the week with a heck of a drop. Now, I wasn't able to catch the entire portion of the drop. I was only able to catch it right around here when it started, bouncing back up into the 153s. Wasn't sure if it was going to hold these lows all day, but then when I saw it starting to recapture the gain, the levels really, really quickly right here, right around 10 o'clock, I entered the position right here, and we went with the 123 puts for about 60 cents. Very, very good, guys. That's about 0.5%. 123 for Friday. Now, I do understand they have earnings, right? But still, 123, guys, that's literally 20% away. It's twice the expected move, and it's down here, right down into here, guys. A very, very juicy previous level. Let me just put a line there as a matter of fact, right? 123. So we'll see how this one plays out, but definitely before earnings, I will be adding another contract. Just remains to be seen, right? Usually some of these stocks have earnings run-ups leading into earnings. So one thing I didn't want to happen, the reason why I took it today, is if ever Tuesday and Wednesday leading into earnings, they have earnings on Wednesday after the close. If ever tomorrow and Wednesday are very green days for the stock and it has like a pre-earnings run-up, well, at least I was able to lock in some premium down here in the 123s, because if it rallies all the way back up into the 165s, maybe I can only get some juicy premium at the 130s, right? So at least I wanted to have one contract down below here. That's just my logic on ELF. I'll probably be doing 1 or 2 more contracts prior to earnings. Now, we did go with some JPMorgans as well, guys, and as you can see from my pricing on JPMorgan, I really didn't get the bottom of the move, right? So JPMorgan was really flushing today, absolute algorithmic flush all day. And I was trying to be as patient as I could, and we wrote these right about here, around 198.70, 198.50. I was like, you know what? This sell-off seems to be a little bit overdone, right? We were hitting, you guys know this trade. This is all-time highs into first oversold conditions on the hourly time frame. Usually a very, very solid trade. Not only was it oversold on the 1 hour, guys, it was oversold as well on the lower time frames. 30-minute crushed. 15-minute was absolutely crushed as well. And when I took the trade, 5-minute was absolutely destroyed too. So I figured, you know what? Let me get into this trade here, guys. Let's throw a little bit of money at it. So we went with the 195s for Friday. And as you can see, it dipped significantly lower, coming down to the 195. So I was patient, but not patient enough, right? So we got these contracts for 37 cents, and now they're $1.26. Am I panicking? No. JPMorgan is a very, very solid company. I think it's an overreaction today. We'll see how this one plays out, but I would not mind being assigned this stock here. And we even went with the 192.50s. I got a little bit better pricing. I was a bit more patient on these, but still nowhere close to the low of the day here, guys, right? I got them for 64 cents, 192.5s. For next week. So this is a 2-week contract you can see the ending price of the day was about $1.07. So we'll see how these 2 contracts play out for the course of the week. I'm just really looking for the eventual bounce. If we get a bounce, guys, most of the premium should come out of these contracts, should be able to close them before their 2 expiries respectively. And we also did another play on JPMorgan, as if those weren't enough. We went with some calls, right? We just looking to make some very, very short-term calls here. We got 202.5 calls for next Friday, right? So 2 weeks out, those calls, decent pricing on them. I was able to get about 76 cents. Now, we could have gotten them a lot lower at 36 cents if we would have waited for the end of the day, but that is just sometimes how the cookie crumbles. I was looking to play oversold conditions, and I didn't quite get there. So this overall cost me about $150 between these 2 calls, and I did get a bit of premium here. So we got about, let's call it about $100, right? So the net cost of the strategy, right? Short puts versus calls, I'm only out about $50, right? Of cost, right? So that we got $1 here on the put credits, and then we had to obviously spend $150 for these calls. So I'm really only out of pocket about $50 net across this strategy. So we'll see how that one plays out. The rest, guys, is fairly pretty much the same, right? We went the Lowe's 217.5s for earnings tomorrow. We got 67 cents for them. Lowe's, their earnings is only supposed to move about 3%, give or take, for tomorrow. So we went a little bit lower than that. We went with about a 5% move down here to about the 217.5 265 strike. So we'll see how that plays out tomorrow, guys. Decent little level of starting up to be support down here. Previous resistance back in this whole area right here, right? So I'm expecting that 217 to at least hold a little bit of weight. And then lastly, guys, we have the Palo Alto Networks earnings play, and you can see, because guys, they got blown out last quarter, right? It's not that I was nervous this quarter, but I knew what to expect, right? So leading into this earnings, the expected move was for about 9%. And from the high of the day, twice the expected move would have been about roughly 18%. So that's really where I went. I went with the 265s. It's in line with the prior bottoms, right? After the earnings and back here as well. Prior support, prior resistance in that level. So this 265, 260 level seemed to be the most solid level. So that's why I went with this location, and we got about 54 cents on those. So those should pretty much be worthless as of tomorrow, guys, because the stock, even though it's dropped a lot, it's only about 295. We're still well away, more than 10% away from our assignment price. So I'll probably be able to close these at a nice gain tomorrow. That's pretty much everything that I had for you guys today. We will be taking more and more trades as the week advances, just staying patient on things. I do want to load up maybe some AMD. I'll probably be playing some NVIDIA, probably be playing some Toll Brothers tomorrow for their earnings if I can find juicy enough premium, maybe some Target, maybe some TJX. If I do those are consumer discretionary, so I'll be very cautious on those. On Wednesday, I probably will be playing NVIDIA and Elf Beauty as well. So still a lot of plays left on deck. Fairly happy with the way the week started. So hopefully all that was educational, guys. If you did like it, consider dropping a like. I would really appreciate it for the growth of the channel. Consider subscribing to us as well. If you're new here, we do these videos every Monday to Friday. And lastly, guys, if you have any questions at all, as usual, feel free to leave them down below in the comments. Anything you want, stocks, technical analysis, an options play you're considering, definitely leave it down below in the comments and I'll get back to you within the first day. So take care, guys. I'll see you tomorrow after the close. Peace.